It's been a while since I've talked about this company. This is a company that sits in Stanley Druckenmiller's portfolio. It's the number 2 position for him, so pretty big deal if you follow these types of investors. The company has a market cap of $44.45 billion. Year to date, it has been performing quite well, but overall, since it went public, it's down close to 50%. Year to date, it's actually up 54%. Now, you can categorize this company as a risky or China-attached type of company because, well, the sentiment around this one and around Sea Limited, for example, has been bad, but Sea Limited is up triple digits this year, and this company is up 54% this year as well. But I do still think that it is flying under the radar. The company I'm talking about is, of course, Coupang, the so-called Amazon of South Korea, of course, without the AWS business. Now, it is not the cheapest one out there right now, based on the current metrics that we have, because as you can see right here, forward PE sits at 86.1 times, EV to EBITDA 26 times, price to sales is fine, 1.4 times, price to free cash flow close to 30 times. Now, this is because, as we go back here to the analyst estimates, this is because in fiscal year 2024, EPS is expected to be negative 2 cents. But after that, huge growth. So 59 cents in fiscal year 2025 and then 90 cents in fiscal year 2026, basically growing 52% year over year. So you're paying around 27 times fiscal year 2026 earnings, which is okay, especially if you are expected to grow close to 50%. Of course, that 50% will not continue, but even if, let's say, the year after that, it's what, 30%, 35%? I think paying 27 times earnings is not that bad. Now let's go over everything that has happened with Coupang, some metrics, business metrics as well, a couple of comments from the past 2 earnings call. Before doing that, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, as I was saying, this is Stanley Druckenmiller's number 2 position. The number 1 is this company right here in the industrial sector, ticker symbol COHR. The number 3 is in the energy segment. So, he's got 7.88% in Coupang. Now, this is what was mentioned basically in the last 2 earnings calls. So in Q1, Coupang's revenue increased by 28% year over year, driven by increased spending from existing customers and a 16% year over year increase in active customers. The company's fulfillment and logistics by Coupang, or FLC, offering recorded a 130% increase in units sold year over year. The developing offering segment, including Farfetch, grew over 340% year over year on a constant currency basis. Coupang plans to invest billions in capital expenditures to strengthen its fulfillment and logistics infrastructure, aiming to increase delivery speed and expand free delivery across Korea. The company also expects to provide over $4 billion in WOW membership benefits for customers in 2024. WOW is basically their Prime equivalent. In Q2, Coupang reported strong performance with revenue growth of 30% on a constant currency basis, 23% excluding the Farfetch acquisition. The company saw a 12% year-over-year increase in active customers and a significant growth in marketplace sales, with outpaced first-party sales. Coupang's developing offerings such as Coupang Eats also showed strong momentum. Looking ahead, Coupang is optimistic about its untapped market potential and plans to continue its strategy of disciplined investment and operational excellence to capture this potential. The company is also making progress with its Farfetch acquisition, aiming for a positive adjusted EBITDA run rate by the end of the year. This happens, it's going to be a huge success. And so looking at the business from, let's say, a zoomed out perspective, gross profit margin has grown to 29.3%. As you can see in Q1 2021, that was at 17.4%. If you look at the stock price has come down while these metrics have gone up. Developing offering revenue has increased 716% since Q1 2021. Product commerce revenue has increased by 56.9% since that same period. Now overall, like we've seen, stock is down close to 50% since Q1 2021. Total revenue is up 192% since then, and gross profit is up 74.1% since then. So the company has improved and has grown quite fast, yet the stock has come down. Now, okay, maybe when it went public, it was just overpriced, overvalued, huge disconnect in the stock market, and so it did not make sense. Okay, fine. But you have to admit that there is right now also a disconnect. Maybe now a bit less than at the start of the year, since the stock is up over 50%. But still, this company is operating in a, I would say, niche-ish market, but a pretty big market, which is the South Korean one. And so over the last couple of years, revenue has grown at a CAGR of 18.5%, gross profit closer to 39%, and CapEx, yes, CapEx has increased a little bit. As they said, they plan on investing billions in the coming years. That's great. That positions them well and basically puts the bar even higher for competitors to compete against them. Yes, of course, their competitors are, let's say, Amazon as well. But since this is a local player, as we've seen with Mercado Libre, usually their citizens, let's say, prefer to use the local player over a foreign one. Then we're talking here about free cash flow. Free cash flow has been stable-ish, other than 2 quarters here, has been stable around $400-500 million or so. As the company becomes more and more profitable, expect that number to go up. Now, if we do a quick reverse DCF here, free cash flow in the last 12 months was $1.5 billion. I put here a terminal growth rate of just 2% and a discount rate of 10%. And so we reach an implied growth rate here of 13.7%. That's how much free cash flow has to grow to justify the current price. Do you think that this is good enough, or maybe too much, or maybe too little? Me personally, I think 13.7% for a company like Coupang right now is a bit low. I mean, if you look at the analyst estimates, yes, this is just sales growth and EPS growth, not free cash flow, but you can see that sales growth is probably going to be closer to 15% or so on average, 13-14% or so on average in the next coming years. And then EPS is still expected to grow probably above 20% for the next couple of years. And so I do think that 13.7% right now, which brings us quite close to the price we're at today, is quite low. And so if I put here 15% growth in free cash flow, plus I also change the terminal growth rate to around 3%, we get an intrinsic value, an estimated intrinsic value that is closer to $30. So representing around 17% upside from the price we're at today. Of course, we can change things around, right? We can put the terminal growth rate at 3.5% or keep it at 3% or 2% and then change the discount rate and maybe improve, let's say, the growth rates in the first couple of years and then decrease it in the year 10, year 9 or something like that. And of course, then you'll get some different numbers here. But this is basically me being a bit conservative, giving us some margin of safety. So that's it right now. I think it's fairly valued. I think there should be some upside, especially because of the way they're operating business-wise. It's founder-led, great vision. They're not really burning that much money on crazy projects. Yes, they're growing outside of South Korea, for example, in Taiwan as well, but that's still very, very small for them. It will take a while. You might also say, since they're only doing South Korea, how big can this become? Well, South Korea is pretty big. It's a pretty stable economy as well. Plus, with the acquisition of Farfetch, yes, I know luxury market has not been doing great. Recently touched on LVMH, but with the recent announcements in China, trying to stimulate the economy, I do think that the luxury market could be bottoming pretty soon. And so a company like Farfetch could be benefiting from that as well. And so right now, looking at the stock, it's right under $25. RSI is pretty high, nearing being overbought, but we're not overbought just yet. We were overbought back here in April, where the stock was at around $23, $24. Of course, right now we are higher and we're not overbought just yet. So there might be a little bit of upside left. Of course, we also have positive market momentum right now. Rate cuts, more specifically, of course, in China, some good news with regards to stimulating the economy. So yeah, some positive momentum. Of course, Coupang, South Korean, not a Chinese company, but as we've seen with Sea Limited, they all get put in one basket for one reason or another. So yeah, that's just the way I guess the stock market works. But overall, I do feel like Coupang is a pretty strong company. I've covered this company when it was at $17, $18 or so, went back up. I mean, you've probably heard about Coupang on this channel because I think I'm one of the only one talking about this one. So yeah, it will be interesting to see how things evolve, especially in the next coming quarters, going into 2025 as well. So that's about it for me in this video. Share your thoughts down in the comment section below, like, subscribe, do all of that, and I see you all in the next one. Bye-bye.